The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
Well, we saw wheat, the upside leader on the day Tuesday. Quartered soybeans found a little bit of green on the screen as well. Is this the start of a wider short covering rally? Is it a dead cat bounce? Is it somewhere in the middle? We're going to talk about that here today on the program. Joining us for a market conversation, it's always good to talk with Matt Bennett from agmarket.net. Matt, good to catch up with you, and thanks for joining us on the show today. I just saw you, a couple days ago in Louisville there at the Farm Machinery Show. So I know you've been busy traveled around here for winter meeting season, haven't you, Matt?
Pretty much nonstop. Yeah, it's been good. It's been one of those deals here this year that a lot of folks have really wanted to do meetings more so than I think the last 3 or 4 years. Maybe people felt like they didn't need a whole lot of help, and now there's definitely a lot of concern, and for good reason. And we don't celebrate that by any means. We're going to try and navigate this together. I farm as well, so I understand the challenges. Because quite frankly, I started all the stuff that I do as off-farm income, and it's been a good way to stabilize the farm. But in a year like this, it makes it to where you feel like maybe you're even spinning your wheels a little bit, being gone nonstop, because the farms may need a little subsidization this year, given kind of what we're seeing go on.
Yeah, well, and in general, I mean, I'm sure it's not easy for you to go talk to folks when these markets have just been under so much bearish weight, Matt. It's been tough for me to find positive things to talk about here on the show because, looking at the state of where the corn market is, where soybeans are at, these are price levels that we've seen them before, but we haven't seen them in a while. And we're kind of in that downswing here really across the commodity sector as we begin the year, aren't we, Matt?
Yeah, for sure. But most of my career, most of my life, quite frankly, a greater part of it actually than not has been under what I would call tough circumstances from a price point action. Whenever I first started farming, we were LDPing corn and beans every year, and that was a big game. If we could pick up maybe an extra 6-8 cents on the Columbus Day weekend, because markets were open on Monday, but the government offices weren't. So, if you had up markets on Friday and Monday, or Monday and Tuesday, all of a sudden you could better yourself quite a bit. And so, I've seen a lot of this. I've seen the frustrations of it. I didn't have to pay high interest in the 80s, but my folks did. I think the lesson I always tell people that I've learned from that is that actually I didn't know that the 80s were horrible because I had a really good upbringing. They were great parents, Now, looking back, we didn't have new equipment, we didn't have new vehicles, and we didn't take vacations. And so, I think that the farm country has definitely had a really good upswing in income, a really good change in balance sheets due to land going from $2,500 when I first started farming to $20,000 now. But with that being said, there's been ebb and flow all the way through that. We've had good times, we've had bad times, and 24 definitely looks like a very challenging year. And 23, when it's all said and done, isn't going to look so hot itself. So, we've got to figure out identifying that. What can we do as producers to be able to deaden the blow, so to speak, manage our risk, diversify our risk, get in a better situation to withstand, something like this that could go on a couple, 3 years potentially.
Well, you and I were talking, kind of having a sidebar conversation last week at the Farm Machinery Show, and I know we got on the topic of corn and really the grains in general, but I kind of wanted to pick that up a little bit for our listeners here today. I mean, we got markets here that are just so oversold. We got somewhat of a bounce on Tuesday, but I mean, to your point, what's it going to take to try and maybe get a little bit of a rally from some of these oversold conditions? I mean, Tuesday to me felt like kind of that dead cat bounce type of mentality.
Yeah.
I mean, are we going to have to go lower, for instance, in corn to really set a floor here potentially? I mean, what do you think, Matt? What are we looking at right now here towards the end of February?
Over the last week or two, it's felt to me like the market wanted to make a run at $4 on front month March futures. I know that that's not real scientific. When you look at the charts, there's not much you can garner out of them, at least on the way down, because you're below all of your support. And so you got to look back towards longer term support, but bottom line, it's felt to me that the market wanted to run towards $4, and that we're probably going to go lower than what we need to, just simply due to the fact that we most of the time go higher than what we need to, and the funds are moving in a herd, so to speak. So you're building a short position, over 300,000 contracts, but at the same time, at some point, you got to ask yourself, do the funds want to carry 1.5 billion bushels of short position into the growing season? And that's not their typical protocol. Most of the time, they want to have the ability to get long the market should a weather rally type situation occur. Now, a lot of people are going to say, hey, the weather rally won't occur basically because last year we had very inclement weather, and they're not going to believe a drought talk situation anymore. And I disagree. I actually feel like the funds, they're assuming a 2.2 right now, or a 2.17, and the new crop carry of potentially 2.5 billion. If you start to move that conversation closer to 2 due to demand, and we know demand's been pretty good. I mean, export demand could actually outpace the U.S. DA if Brazil has inclement weather. First of all. Second of all, I think corn usage for ethanol is likely to be greater than what the USDA currently suggests. So let's say you get down to a 2 billion carry, and then you have inclement summer weather. I think the funds step in and buy this thing. So, I'm not saying they're going to go long 300,000 contracts. What I'm saying is they may cover most of that short and be in a position to where they've got the balance and the ability to step in and go long this thing if they need to. Time will tell. I will say, Jesse, overall, I'm bearish. I mean, overall, I think by this time, or I'd say by fall, if you have a decent Brazil crop and a decent U.S. crop with 90 million plus acres that I expect to be planted, I think that you could look at some sub $4 D's corn. But what I'm saying is between now and then, it would be very abnormal if we didn't see some sort of upward movement, some sort of fireworks in the market. And so, I'm trying to encourage my folks, if you do want to get floors in place, let's stay flexible, because this market, if you get everyone leaning, Jesse, I can assure you this, if you get most of the market, quote unquote, leaning to where they're going to benefit, if this market moves lower, it's going to move higher at some point, and it's going to take prisoners with it. That's just the way the market works.
Well, and to your point there, I had this thought in my head, a lot of the funds and the short positions, I mean, just has like this bearish chokehold on the market with nothing seemingly is looking to alleviate that position. It almost feels like they're going to have to loosen their grip in order for these markets to maybe see some rallies here, Matt.
Mm-hmm. Yeah, you would think so. I mean, the thing is that makes it tough is, let's say the funds are, short 1.5 billion bushels. So, the U.S. farmers probably still sitting on 8 or 9 billion bushels. I'd say at least that they don't that they can reward the market with. Now, there's been a lot of folks coming to the market with, or coming to the elevator with, wanting a basis contract to get their hands on some funds. I've got, no issue with that, Jesse. I wouldn't put all my eggs in that basket just in case the market moves lower, because it can. And if it does, then basis has to do the work to get the remaining corn out of the farmer's hands. So you don't want to be sitting there with a locked in basis and a lower price basis the board whenever your basis would be improving in that time frame. A lot of folks are taking what we call free DP. And I don't want to beat up on free DP, but essentially what you're doing is you're taking your corn out of your bin, taking it to the elevator folks or whoever you're dealing with. And they are, and I say this tongue in cheek, but they are so graciously taking your corn off your hands, with no storage costs. Well, they get physical ownership of it, Jesse. And so the bottom line is this: if I put all my corn in their bin, I've got no bargaining power whatsoever. So I don't have a problem with some free DP. It's just, again, I don't want to put all my eggs in that basket. I mean, the thing is, the last few years, we've been able to do lots of things out of convenience and still make a whole lot of money farming because we didn't necessarily have to be the best marketer in the world. And February 24, that is not the case. We actually have to be really good business people because in some cases, we're going to have to minimize losses. I mean, I hate to put it that way. It's just the way that it looks right now.
We're having a conversation with Matt Bennett from agmarket.net here today on Market Talk. And Matt, you and I were talking as well before we went on the air. Wheat was the upside leader on the day Tuesday. Looked like a really strong market. I know all three wheat complexes are very oversold as
Right.
well. And I know sometimes in the past we've looked at wheat with it being such a globally traded market to maybe be the leader to kind of lead us out of some of these spots. Do you think you were kind of talking to me about this? Expand upon that if you can for us. I mean, do you think
Yeah.
wheat could really be the leader here to potentially pull these markets out of the doldrums?
Well, I mean, the first thing I want to say is that we've seen it happen before. We've seen it happen where corn, beans, and wheat, they just look pathetic. Nobody wants to buy any of them. Funds are selling them. And then all of a sudden, something happens sometimes in the wheat complex. Somewhere around the world, we have a disruption. What we have to also understand is with wheat, both domestically and globally, we continue to whittle down, our stocks to usage ratios. Whereas we used to regularly run well in excess of 50%, both domestically and worldwide. Now you're looking at 35% type stocks to usage ratios where you still got ample wheat. Don't get me wrong. It's just that there's a lot of folks in the world that are already saying, now hold on a second, they don't really like how this works because wheat has always been one of those things that people want us to have plenty on hand just in case you get into some sort of a global weather situation. So let's say that we end up with this. Some folks are starting to call. I've seen a couple of people looking at a really cold shot of air, coming into the Western Corn Belt, Western Plains type situation in the month of March. I believe right in the middle of March. If something like that would happen without much snow cover, any of the winter wheat that you've got obviously could be susceptible, first of all. Second of all, most people are talking about less spring wheat acres planted this year, than so total overall acreage would be a little bit lower here in the U.S. Now, we're not number one by any means, but bottom line is it still could make an impact. And so I'm not saying you're going to take off on this banger of a rally. What I'm saying is that if this wheat market would stabilize, sub $6 wheat, given stocks to use, if you compare before, if you got down to 35%, we've seen very high prices of wheat sometimes. And so, I've got to think that there's a chance you could at least stabilize the market. So again, I'm not looking for any massive rally in here, but I do think that once you start getting people to cover shorts, a lot of different things can happen. One thing I'll say is if the funds do cover their shorts in the corn market, I would expect, even though the farmer's holding on to a lot of corn, I would expect that you could get a 20, 30, maybe even a little more than that cent rally on the board. Now, with that being said, your cash price probably will increase a half to 2/3, of what your board price is because basis is going to have to widen for elevators to be able to handle all the bushels that come to town because it's no secret that the farmer's sitting on a ton of corn. And as those bushels move, it's going to impact basis, no doubt.
That's a great point that you bring up, Matt. And I think just in general with these markets, it comes back to that thought of, you mentioned it earlier, having flexibility, having a plan. I mean, this is an environment right now where it's ever so important to what you said earlier, Feb 24 here. We got to be smart marketers and we got to have a plan underneath us here and being willing, I guess, to stomach maybe some prices that we don't want to necessarily love, but we know that we can make a profit at that level, right, Matt?
Yeah, essentially. And so the way I see our marketing this year might resemble somewhat to crop insurance. So crop insurance, in the last 2 years, we were able to guarantee a profit margin. Actually, the spring price was high enough that most people could say, hey, I'm going to make a little bit of money this year if worse comes to worse. This year is not one of those years. This year is one of those years where we're trying to keep ourselves from a disaster. Most people, if they owe anything on any ground or borrow money on an operating note, are probably looking at crop insurance helping them avoid that sort of disaster, but not necessary to protect a net income, if you will. And so our marketing plan, I don't see any huge hurry this early in the marketing year, but if you're like a lot of the folks I talk to, you'd like to protect, a potential move in D's corn from this 460 level, down to $4, because let's just say we end up with a crop insurance price of 470, Jesse. 85% of 470 is $4. And so, if you get into a situation where this market plummets due to, let's say we plant 92 or 3 million acres and you have a good spring, I don't know. But if the market plummets, that move from 460, 470, wherever we might be at the time, down to $4, you're essentially unprotected if you do nothing, other than buy crop insurance. Now, the crop insurance is a great program, subsidized put option essentially, but can we stomach that kind of a drop in prices? If you protect it, there's ways you can do it. And we've been showing folks cheap ways you can do something like that, just a simple put spread, and then maybe you want to sell a call above the market. If you buy crop insurance, I don't ever sell calls on a crop that I'm about to plant unless I can buy crop insurance or am planning on buying crop insurance. And then I will sell calls versus at least some of my insured bushels. And so in that particular situation, I'm protected on that move from 460 to $4, and I don't feel so bad if the thing plummets. And then if the market goes up and I'm basically forced into selling some bushels at 535, 45, 50, whatever it is, most of us are going to be pretty darn excited at those types of price levels versus the kind of input costs we've got, because then we can actually make a little bit of money.
You bring up crop insurance on the grain side. On the livestock side, cattle in particular, LRP has been really hot this winter. I know there's more optimism in the cattle markets right now, but your thoughts on some of the things we're watching in that cattle sector? Maybe you've been hearing from folks traveling around, a lot of people maybe using some LRP, things like that. I mean, talk to me about your thoughts in this cattle market right now, Matt.
Whenever you see cattle prices earlier in the year, before the calendar year turned in the high 190s, thinking about some way to protect yourself, LRP definitely comes into play as being a pretty good way to do something here. I like LRP. I don't sell it. Some of the folks that work with us actually are licensed insurance folks and have had a lot of contacts with other people. Ag market, let me just reiterate, ag market's got nothing to do with crop insurance or LRP, but we have people who work for us who also, are in that game. It doesn't impact us whatsoever as a company, but it does offer some of our folks that deal with a lot of cattle producers another option to manage their risk. And I do like the way that program works. So whenever I look, for instance, at the cattle market, we've got cattle on feed coming up this Friday. Jesse, I think the numbers are going to be pretty low. Most people feel like placements in January due to the weather situation, a whole lot of other factors. You're going to be looking at probably some pretty low placements. Cattle on feed numbers maybe drop back just a little bit. I do think those numbers pick back up for instance, whenever we get out into March, because I think, you'll basically some of the cattle that might have been placed in January will get placed in February. So I don't think that March is going to be a super bullish type report, so to speak. But here's what I'm going to say. Overall, the trend continues to get to where we've got less cattle even to place. I mean, available to place. And so with that being said, I think this is a futures market. A lot of these folks want to own cattle. I think that the market probably will take a dip sometime this week as you get closer to those numbers, because we've had such a good ride here lately. And I think everyone knows once you do get some bullish numbers out there on Friday, you come in next week, you're going to have a hard time rallying, because what are you going to rally on? The long-term implications, even though short-term I could see a little bit of a setback, the long-term implications are that I don't think the funds want to be short this market. I don't think that they want to short potential placements and cattle on feed numbers being excessively low. And so it's going to be very interesting to see how this plays out. I don't know if we make new highs, but I am getting in the mindset that a producer who knows they've got some meat on the bone, so to speak, should be stepping in here, managing risk. Even though I could see maybe another $10 to $15 higher in fat cattle potentially sometime here in this marketing or calendar year, but I still want to be managing risk. And you know what? If the market goes on up, it goes on up. I want to put a flexible strategy in place to where I can maybe participate up to 205, 210 if we do see that magical $200 number hit.
Matt, good stuff. Before we let you go, anything final you want to share, or just reiterate to folks here in this window right now?
Yeah, I mean, two things. Well, I mean, one basic thing. I've heard a lot of folks that are very concerned on the winter speaking circuit, so to speak, and for good reason. On the flip side, though, is Louisville last week, it seemed like people were in a good mood. I think everyone's still got some money in their pocket from 21, 22. But I want to make sure that we don't get a false sense, of safety, if you will. I want to be very proactive about managing risk here. Bottom line is, this could be a really tough type of year, and so when we do get rallies, I want to be in the mindset of protecting whatever rally we get, and flexibly be able to put a worst case scenario in place. So, bottom line is, this market could definitely look pretty rough this time next year.
Very true. Well, folks can reach out with questions, find a look at all of your guys' intel and more very easily. Agmarket.net. Matt Bennett. Matt, it's always good to talk with you, my friend. Appreciate the time. Thanks so much for joining us today on the show.
Absolutely. Thanks, bud.
Matt Bennett, agmarket.net, joining us here on Market Talk. We're out of time. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.